Did you know that you can do a cash out refinance on the investment properties that you own without showing any income on the application, without providing any tax returns, no paycheck stubs, and if you're taking cash out, you don't even have to supply bank statements. So what this is called is a DSCR loan. That stands for Debt Service Coverage Ratio. And very simply, what a DSCR loan is a business purpose loan where you qualify for the property based on the cash flow. So when we're talking about cash flow, really what we're talking about is the monthly rents. So let's just take an example. I'm working with a gentleman right now. He owns a house in Chicago, Illinois. It's worth approximately $200,000, and he doesn't have a mortgage on it. Now, he's self-employed. He spends a lot of time outside the country, and actually, he lives rent-free with a girlfriend in Texas. So what he is doing, or what I'm going to do for him, is give him about a $150,000 mortgage. That's 75% of the value of the property. He's not supplying any of that documentation, no income on the application, no bank statements, no tax returns. Now, what we'll do, and this is how the DSCR loan works, is you have to do an appraisal, of course, to find out what the value of the property is, but also in the appraisal, the appraiser is going to do a rental analysis, a rent schedule. So on an appraisal, you're going to have comparable properties to figure out what the value of that property is. The additional rent schedule is like that, but it's going to find comparable rental units around that property. And there's going to be about 4 rents, and then whatever the average of that is going to be the average rent for that area. Now, typically a DSCR loan is going to want to have at least a DSCR ratio of 1. That means that the mortgage at least covers, the rent, the monthly rent at least covers the mortgage. Now, with that, you can do actually up to an 85% purchase, but I will warn you on those, sometimes it's going to be hard to have that much of a mortgage and get enough rent to cover it. But typically you would do 20% down. I'm actually doing one right now, as a matter of fact. And if you're doing cash out, you would be able to do up to 75% loan to value. Now, I'm doing another transaction with another buyer. They're buying a condo, so it's a purchase. Now, originally, we were going to do it with 20% down, but these are some things you have to take into account. This condo has a high HOA fee each month. So the monthly rent schedule that came out on these condos was that the mortgage payment is going to be slightly higher than the average monthly rent. So what we had to do is this buyer was going to have to put another 5% down, and then you only have to have 3/4 of the mortgage payment covered by the rent. So there are different ways to move this around. It does go even further. So if, for example, you're doing a purchase and you have, say, 30% to put down and you don't think it's going to cover it at all, the rent is going to cover the mortgage, then you can do what's called a no ratio DSCR loan. So now the next thing to talk about with DSCR loans is these are business purpose loans. That means that they're not for, well, you can't do them and live in them, right? You can't do it as a primary residence or a secondary residence. It has to be as an investment property. Investment properties are allowed on these types of loans to have prepayment penalties. Now, why would you want a prepayment penalty? Well, the reason is that if you think you're going to keep the house 1, 2, 3, 4, 5 years, then putting a prepayment penalty on it will bring the interest rate down, sometimes considerably. So right now, a 3-year prepayment penalty is kind of the sweet spot. But if you wanted to take a 4-year or 5-year prepayment penalty, then the rate would get even better. So I'm not quoting rates. Rates are always going to be based on credit score, all kinds of different factors. But right now I'm seeing somebody taking cash out to the max on investment property with good credit at around 7%, something like that. So really not a lot different, sometimes cheaper than doing a Fannie Mae fully documented loan. Another thing about these loans is there is no limit, right? Now, you might have to only have 4 or 5 of these loans with one particular mortgage company, but you could have an unlimited number of these loans and, have them with different mortgage companies. And that's one reason, people get, sometimes people, maybe you, have so many mortgage properties in your portfolio that you can't do anymore because Fannie Mae will only do up to 10 properties. And really the reason that is there's so much paperwork. If you're doing a traditional mortgage, you're going to have tons of paperwork, and it's just too much to wade through for a Fannie Mae underwriter. So again, there is no limit on the number of properties you own for these kinds of homes. Also, you might remember, if you know anything about doing mortgages, maybe you have some mortgages that you did with a fully documented Fannie Mae loan. You have to have reserves, number of months reserves, depending on how many properties you own. On the DSCR loans, you only have to have reserves for the property you are buying or refinancing. So I have some mortgage companies I work with that only require 2 months reserves. Some require 6 months reserves. It just depends on your different scenario. So to recap, if you are trying to buy an investment property, maybe you don't have a job, maybe you're self-employed, maybe you're retired, for whatever reason you can't fully document your income, that's fine. You can buy it with a DSCR loan. Or what I'm seeing a lot of, again, is taking cash out of an investment property that you already own. So if you have any questions on this, put them in the comments below. I'll do my best to answer them. Or go to my website, mortgagesbyscott.com. You can put in a form, send me an email, tell me your situation, and then we can schedule a time to get on the phone and talk over your particular situation. If you found this video helpful, it would be super helpful for me if you would like and subscribe. And if you think you know somebody that could benefit from this, please share it with them. Thanks for watching.